Michael, good morning. Good to have you back.
Good morning. Thanks for having me.
Let's just do some housekeeping and I don't know, do we put this Roku thing completely in the trash bin?
Yeah, I think that last discussion was pretty much what I would have said. I know why people at Roku would want this to happen. I don't know why Netflix would do it. So yes, Carl, put that aside. Not something we want to act on today.
Right. Where do you think they do stand? This Needham note today, talking about the other things they need to do, makes the added point that they believe free has the biggest TAM, as Laura Martin writes, and as a result, you're looking at a lot of AVOD winners relative to SVOD winners, for example.
Well, free is basically you want a dual revenue stream, right? It's hard, as you're saying, to keep pushing up price for subscription-only services. So every other company's got two revenue streams. That's how cable was built. Netflix needs to do that. We've been saying that for a long time as well. But that pivot's going to be hard, right? We don't know how they're going to price the new ad-supported tier. Is it going to be dilutive to their other tiers? So there's a lot of details here that I don't support that idea of like, hey, it's cheap enough now. We don't know how to even model this transition because there's so many moving pieces to it.
Michael, it seems to me that the argument for Netflix as a technology company is dramatically damaged, not because its technology has gotten worse, but because other media companies' technology has gotten better. Just that idea of a moat that they had based on the data, based on the interface, doesn't seem to be bearing out because, hey, Disney Plus is pretty good. Won't talk about our parent company, Comcast and Peacock and whatnot. But, some of the things that Netflix was insisting on doing, putting out all the episodes at once, it was fine not to have a library. All that's been challenged by competitors in a way that seems to knock it down, right?
Yeah, that's been my issue forever, right? I'm a media analyst and looked at that as a media model, and the way that NASDAQ was valuing it made no sense to me. So I've been consistent on that point. It's a media company. They're going to have advertising, sports, ad salespeople. They're firing people. They have to move to theatrical windows. It's a media company, right? Maybe trades on NASDAQ and held by growth investors, but it's a media company. At some point, there are media rules that companies have to follow and media valuations. And that's been our consistent, complaint for years. And it kind of makes me a little bit happy that people now asking those right questions about, what is this thing actually? It's a media company.
So, Michael, what does Netflix need to do? Can it grow its business into the next phase organically, or does it need to look at an acquisition? Not very many people are enthusiastic about Roku, but I'm looking at a Roblox, which has about a $20 billion market cap, a Unity, which has a nearly $14 billion market cap, and Netflix has already said and been experimenting in gaming.
Yeah, I don't really think that's the direction that I would go in. I would look to buy a library, look to buy another studio. I would basically
stick to its core.
It's a media company, right? Like they're fighting one battle on one war now. Going to gaming opens up a whole nother category of competitors. I'm not sure what their edge is there, right? So I also think the question, Deidre, is like, how much are they spending, and what's the ROI of that spend, right? Are they overspending? Yeah. Why make 80 movies a year? It makes no sense to me, right? Make 20 great movies. So I think they need to come back and revisit their thesis on their, how they've gotten here. And maybe it's a business that spends less, has an ad tier, has some sports to it, owns another library, but it has to change from where it is today. That's clear.